The broadcast is now starting. All attendees are in listen-only mode.
Good evening, everyone, and welcome to our Wyoming Women's Business Center 2018 webinar series. Today's presentation is Developing a Cash Flow Statement. My name is Waldo Smith. I'm the Director of Microlending for the Wyoming Women's Business Center, and I will be your presenter today. You'll notice on your GoToWebinar control panel on the right side of your screen, there is a box called the Question Chat panel. If you have any questions as we're going through the presentation today, please enter them in that box. Christine Langley is with me today, and she will be monitoring your questions. She will be asking those as we go through. We will also take time at the end of the presentation to answer any questions you might have. My background is I've spent 27 years in lending, working with clients, developing cash flows, developing financial statements, working with both commercial and agricultural borrowers. I also spent 4 years prior to coming to the WWBC working as the financial director for a local nonprofit. And so I have spent a lot of time working with financial information. Today we're going to talk about a little bit introductory of what the Wyoming Women's Business Center can do for you. We're going to go into discussion on what a cash flow is, what it can do, and how you go about putting one together. And then we'll have time for question and answers. The Wyoming Women's Business Center's motto or mission statement is promoting economic equality in Wyoming through successful business ownership. And we do this in a number of ways. We are a nonprofit organization that we help individuals start businesses or help them with issues that arise once their business is up and running. And we strive to promote financial self-sufficiency within the state. As I said before, we offer business planning services, business counseling, business projection assistance. We offer networking opportunities and educational opportunities, and we have access to capital. We require all of our loan applicants to submit a basic business plan as part of the application process, and we offer assistance in developing that plan. We have several staff members who can work with you and guide you through that process. Our networking opportunities include monthly roundtables in Cheyenne, Torrington, Jackson, Laramie, and then we have these online training, have online webinars on a regular basis that we also record and we upload to our YouTube channel for those of you who may have to exit early or miss part of the presentation. If you know someone that could use this, you can direct them to our YouTube channel. Go to YouTube, enter Wyoming Women's Business Center, and you'll get a listing of all of our previously recorded webinars. Our access to capital involves our microloan program, which is a loan program open to businesses throughout the state of Wyoming. We offer loans from $500 to $50,000. You have to be a resident of the state of Wyoming, or your business has to be registered here, and you have to be unable to obtain financing from your local bank. We also have an IDA program, which is a match savings program, which can be used for business purposes. You save money over a period of time. Once you've met a couple of criteria, we can match that dollar for dollar up to $2,000. So before I get into this any farther, I do want to let you know that we are recording this webinar. We will be uploading it to YouTube afterwards. And so you can look for it there if you want to go back and review some of the things that you've seen. Immediately following this presentation, we will have a survey that will launch as you exit. We ask that you please complete that. It assists us in knowing what the job we did, how we can better serve you, what topics that we may come up with in the future. So everyone is still muted, and we will keep you that way to eliminate background noise. So again, if you have questions, please enter them in the chat question box on the control panel. So our objects today, we're going to discuss what is a cash flow statement, what makes it up, what's involved, what are the parts of it, and how I can use it as a tool in my business. If you've participated in any of the financial information webinars I've done up to this point, you probably recognize this. It's very important for a business owner to keep accurate records. It helps you make clear decisions, understand where your business at, and I guess the final sentence there is the most important. With the loss of understanding comes almost inevitable loss of control. So it's very important that you know what your business is doing and how you can react to things that are happening inside your business and in the economy outside. Here's a quote from Daniel Sitars. It is absolutely vital that small emerging business owners intimately understand their financial position. Daily decisions must be made which can make or break a fledgling business. He goes on, just knowing you can have an accountant and you can have a bookkeeper doing this stuff for you, but if you don't understand what the figures are telling you, you will probably struggle. So there are three basic tools used in bookkeeping that creates a financial picture, overall picture of your business and how it is doing. The first is a balance sheet, which represents a moment in time. It shows you three things, or it's made up of three things. Assets, which are the things you own, cash, inventory, equipment, land, buildings, etc. Liabilities or debts, that's what you owe other people. It might be accounts payable for inventory. It might be a loan at the bank for that piece of equipment. It might be a loan to us for startup capital, things that you have to pay. And then the difference between those is net worth. Hopefully, ideally, the net worth is positive. That means that's your cash position. That is the equity you have in the business. If you sold everything and paid everything off, that's the money you would walk away with. The second is the income statement. This represents a period of time in the past. It shows income that's come in. It shows expenses that you've paid out, but it includes non-cash items such as depreciation on equipment, change in inventories, that sort of thing. And then the difference between the income and the expenses is the profits. So income statements can be the same as a cash flow if you're working on strictly a cash basis and you don't depreciate. But if you're using an accrual basis and you have a lot of items that you depreciate, then an income statement and a cash flow statement are two very different items. The third then is the cash flow. That's what we're going to represent or focus on today. And it represents a period of time. It can either be looking back or projecting forward, but it shows cash in and out of the business. So a definition, there are two definitions of cash flow. One is the balance of cash received less the amount of cash paid out over a period of time. or the second one is cash moving in and out of your business. The simplest form of a cash flow is your bank statement that you get from your bank every month on your business account. You can look at it. It shows you what you made for deposits. That's the cash income, cash in, and what you had go out, the debits, the checks you paid. That is the cash going out. So with that, I'm going to ask Christine to launch a poll for you. And I'd like you to, the question is, how frequently do you look at the cash flow of your business? Is it weekly? Is it monthly? Is it quarterly? Or is it just once a year when you do your income taxes? And I'm just going to let you take a few minutes to respond to that. Looks like everybody's voted, so let's go ahead and take a look at the results. So 17% look at your cash flow weekly. That's good. And depending on the size and the complexity of your business, it may require a weekly review. 50% of you said monthly. That's probably pretty typical for most businesses, especially if you're reconciling your bank statement on a monthly basis. You may then take the time to print out your income and expense report. And a third of you said you do it on a yearly basis when you do your taxes. If your business isn't overly complicated and you're just starting out, that's maybe adequate. I would suggest you might want to look at it a little more frequently than that. And as we go through, you'll understand why I say that. So let's close that. And in the interest of accurate disclosure, I need to say that the slides I'm showing you now come from a joint effort put out by the Federal Deposit Insurance Corporation and the Small Business Administration. It's a program called Money Smart for small businesses. And so I just downloaded some of their slides because they explain things rather well. So what is a cash flow? It's a financial statement using assumptions to forecast company cash flows in and out, future cash flows, projections, etc. A cash flow projection is a financial statement that tries to show how cash is expected to flow in and out of a business over a period of time, either past or future. Usually a cash flow is used for future projections. The cash flow is used to see if projection cash receipts or inflows will be sufficient to cover projected cash disbursements or outflows. A business can be profitable, but you can still run out of cash. You can be making money, but still run out of cash. So it is a tool to help you manage your cash in order to pay your bills on a timely basis and keep your doors open. How can you be profitable and run out of cash? Well, if you're buying too much inventory, say you have a feed store and you know that you're going to have a big demand for stuff through the winter. You've got a lot of ranchers out there looking to buy feed. You may, in the fall, order a bunch of inventory in. You have to pay for it within a certain period of time, but you're not going to sell it maybe for 2 or 3 months. And that can run you out of cash. You're being profitable, you're making money, but you're short because you've got too much inventory on hand. So how can a cash flow projection help, and when do I need one? Well, it's a great tool for setting sales goals, for planning expenses to support those sales. A related use is for projection is to determine your break-even point during startup or an expansion of your business. If you need to plan for large expenditures such as equipment purchases or moving to a new location, it can help you with those projections, to see if it's feasible to do. Also, if you have a
Hey, Waldo.
Yes.
Hey, Waldo, it's Christine real quick. I think your screen is stuck on the poll. Can you click over to your slides again? I'm not sharing the poll anymore, but we're just seeing the quick poll on your screen.
Okay. All right. Are you seeing this thing? Should you have a screen that says cash flow projection? How can a cash flow help, and when do I need one?
Yeah, we're stuck on the poll right now, even though I've closed it and the results aren't being shared.
Okay. How's that? Well, did that do anything for you?
No.
Okay, let's see. And I've tried to exit out of the poll completely, so
Yeah, I'm not sure why it's stuck on the quick poll because I've already shared the results and closed it out.
okay.
The only thing I can think is that it's stuck somewhere. Your screen is stuck somewhere on that quick view poll. Thanks for hanging with us, guys. A little bit of technical difficulty here. We're working on it.
Okay, I'm going to re-show my screen. Does that audience view? There. Did that solve it?
Yes, perfect. Thanks.
All right. I apologize for that. So, let's see, where was I? If you're looking at expanding sales or setting goals going forward, if you're looking at break-even projections, if you're looking at purchasing equipment or expanding your business, or you know that your inventory, your business is seasonal, you have high times and low times for cash income, Cash flow projections are the tool to use to try to manage that, those differences, those changes. A profit and loss statement or an income statement can help you, but if you're using accrual accounting, it can mask and not give you a clear picture. If you don't know what accrual accounting is, you're probably not using it. So I wouldn't worry about it for this application today. Cash flow can also help you track liquidity. That is your difference between your cash that you have on hand versus the immediate cash that you owe. It's current assets minus current liabilities in an accountant world. The cash flow can help you determine when you might need some financing. And it's a tool to use for lenders to show that you have repayment ability. They will always ask you for a cash flow projection. If you make application for one of our microloans, that's one of the things we're going to request is a 12-month cash flow projection, so that we can see you've got enough income expected to come in to make all of your expenses and make payments on your loan. So here's a sample cash flow, and I'm going to go in more detail on the next slide, but this just shows you the parts of a cash flow. The source of cash is this section up here, and it includes sales plus other income. It would include new debt if you're borrowing money. If you have a line of credit at the bank and you take an advance, that is cash that goes in here. If you have, say you have an inheritance and you've got money you want to put into the business, that would be shown in this section. The operating uses of cash are things like advertising, insurance, marketing expenses, property taxes, and then there's non-operating cash uses. That would be things like purchase of equipment, principal payment on your loans, what you pull out for your owner's draw to pay yourself a wage, income tax payments. Those are things that really wouldn't show up on your income statement, but they do show up here because they are a cash outflow. So I'm going to switch gears here now and show you what a cash flow looks like and how we put one together. This is a template that we offer. And so if you've got a business that you're selling a certain product or a service, the place I recommend people start at is a sales forecast for the coming year. And here's an example of one. So we've got product number 1. We anticipate in the month of January selling 80 units of that product. Our selling price is $120 a unit, and our cost of production or our cost of acquiring it is $10. If you multiply that out, that's $9,600 in sales and $800 in cost. And you can see going across month by month, February's 80, March is 80. The nice thing about templates like this is they do the math for you automatically. You can do this on your own on a spreadsheet, as long as you code it correctly, or you use a calculator to do the calculations yourself if you're not familiar with Excel. But we've got product 1, product 2, product 3, product 4, product 5. You can have as many products as you want. The nice thing about these templates is then when you enter this information, it flows automatically into your cash flow. So here's your cash inflow, source of cash. And you see the top line is what you have in the bank at the beginning of the month. In this case, January 2013, we had $5,000 in the bank. I should have changed that to 2018 or what, but so we start with 5,000. We've got sales of 23,200. We didn't borrow any new money. We didn't have any cash injections or anything. Our use of funds, our operating use of funds, is here: cost of goods, accounting, automobile, bank charges, insurance, interest on loan payments, etc. And for the month of January, that's $11,278.33. Our other non-operating uses is a principal payment on a loan, $266.76. Gives us total cash expenditures of $11,544.10. So we've got cash up here. Beginning cash plus inflows is $28,200 minus $11,544. We have a cash balance of $16,655.90. That carries from end of month 1 to the beginning of month 2, and so on and so forth throughout the 12 months of the year. And then this far column here totals your rows across. So you see total sales, total cash operating expenses, total cash non-operating expenses, and it should give you then your projected ending cash balance. This particular template has a sheet to start with that you can also then say I want a 2% or a 5% growth for year 2, 10% growth for year 3, and it will automatically calculate years 2 and year 3 for you. The best way to, if you're looking at what happened this last year, best way is just to take your bank statements. Like I said, that's the simplest form for a monthly cash flow. You know what your sales were, what your deposits were, and put that in, break your expenses out, and you can develop this on a spreadsheet. You can then use that tool for looking forward, projecting to the next quarter, to the next year, whatever period you're looking at. And this isn't a good, probably the best example I should have worked out, but as you look down through here at your cash balance, you can see it's remained steady. There's a couple of months where it might drop down. I guess we're showing a steady increase in cash balance. This business is doing really well. But if, say, you got into April and May, and suddenly these figures were showing up negative, then that's a time when you've got to plan in advance. Do I need to go to the bank and get a small operating loan to cover those months? Do I need to make other plans, not buy so much inventory right now? That's where this tool can be most helpful for you. So if I'm experiencing a problem with my cash flow, what do? If I know I'm going to be short, or my cash flow projection shows that I'm going to be negative towards the end of the year or as I go through, well, there are things you can do as an owner of your business. You can increase the number of items you sold. That usually requires additional advertising and stuff. But if you sell more product, you're going to have more cash coming in. You can increase the price of what you're selling, your service, your items, your widgets, if you can't increase the number. So price it a little higher. You can reduce expenses. Take a look at where you can cut costs. Do I have too much insurance? Can I renegotiate the interest rate on my loan to get my interest payments down? Should I take less of a payroll for myself to give myself more cash? Do I need to change the timing of expenses? Instead of ordering stuff now, should I wait 2 months? Can I get by with a lower inventory? Should I talk to my suppliers? And I think this is the next slide. Should I talk to my suppliers and see if they can give me a little bit longer time to pay? Or can I negotiate a lower price for my inventory? Do I need to set up a policy that kind of forces customers to pay me sooner? Pay within 10 days or pay within 15 days, or there's a finance charge. There are a lot of things you can look at to try to improve your cash flow. So that's it in a nutshell. At this point, I'm going to open it up to questions. While you are entering those questions or formulating those, I do need to say that we are an agency that partners with other agencies. Our funding comes from the U.S. Small Business Administration, the Wyoming Business Council. We have funding currently from the Wyoming Women's Foundation and the AARP Foundation. And so we want to recognize our funding partners. And with that, are there any questions? Is there anything I need to be go back on and explain a little bit clearer for you?
So while those people are kind of formulating any questions that they might have, I was curious about coming up with the cash flow when you have no prior history. If you're in your first year of business, you're going to, the bank in order to get some kind of financing, or you're coming through us, and you're trying to do these sales projections. What are your recommendations if people, if they don't have any past experience in doing this? Of course, they're hoping for the best. How should they formulate a cash flow projection without historical data?
That's a good question. And that's probably the toughest part about formulating a business plan to prepare to go to a lender. It's just a best guess estimate in most cases. That's why I say, going back to the example, let me go back to this sales forecast sheet. You need to do some research initially to determine what it is what it's going to cost you to perform your service, to obtain your product that you're going to sell, to manufacture your product, whatever your business is. You need to determine what the cost is and what you're going to sell that item for. And that you always want to try to build in a profit. And that's sometimes through experience, you'll find out you underprice something. Only time will tell you that. But once you've established what your selling price is and your cost per unit is, then it's a matter of, what do I think I can actually sell on a monthly basis? If you're just getting started, it's going to take a while for word to get out, for your advertising to be effective. And so it's realistic to expect sales are going to increase over time. And so you normally project low numbers and then slowly increase them over the 12-month period.
Yeah, no, that makes sense. And I know for some of my businesses that I've done in the past, sometimes I pull some of those projections just from the marketing analysis or the market research analysis that I did on my competitors. And I try to backwards map what my competitors have done, or what I think they've done. You know, in some cases, I was able to actually contact businesses out of the area, sometimes even out of the state, that, you know, convinced them that I was not competing against them, that I was simply just trying to get some data as far as numbers were concerned. Other cases, if, you know, I joined a particular association, like, for example, I used to have an ice cream company and I was a member of the National Ice Cream Association. Believe it or not, there's one of those. And they would often be able to give you kind of average numbers of what you can expect for sales during high season versus low season. And you should anticipate, for example, in that industry, a 35% drop in sales in the winter months. And in Wyoming, it was even a bigger drop than that, you know. So sometimes just that market analysis or the competitive analysis that you do can give you some of those numbers as well.
And once you've got then those sales estimates, then you can focus on what you anticipate your bank or your expenses are going to be. You can go to your insurance agent and they can give you a quote of what the insurance premium is going to be. Then you need to visit with them. Can I pay that monthly? Do I have to pay that quarterly? When does that have to come due? And you put it in the cash flow accordingly. Same with licenses. Same with marketing. You do research to find out what those are going to cost. Check with the telephone company. What's it going to cost me what's it costing me now for my service with internet? Do I have any supplies for my office? What do I think it's going to cost? This cash flow shows equal expenses all the way across each month, but you may have some items come due quarterly, some items come due monthly, some items come due twice a year or only once a year. Whatever you know it's going to cost, when it's going to cost, that's what you put in the cash flow, because then that will tell you down here at the bottom again, do I have a month when I'm going to be negative? What do I need to do to plan for that month? So it's research. And the simple question to answer to Christine's question is, you do as much research as you can to try to arrive at an educated guess. Cash flow projection, if you're just starting a business, is an educated guess. And I've got another template that has actually 2 columns per month. You can go in and put in your projections, and then as you go through the year, you can actually use that as an actual, the second column is actual figures, and you plug them in at the end of each month, and you can see how you did in comparison. And so you get to the end of the year, you look at that comparison, that will be invaluable for you to do your next year's cash projection.
Yeah, absolutely. Year 2 is always so much easier than year 1. And I can remember, you know, going through each line item in the cash flow and thinking about, okay, accounting, you know, are there certain months where my accounting costs are going to be more than others? And so, of course, if I'm paying someone to do quarterly reporting for my payroll taxes, then my quarterly bill from them is going to be higher than my typical bill, which would just be for processing payroll. Or my January bill is always typically higher because that's when all my W-2s go out and they charge me X number of dollars per employee, right, to send out my W-2. And then I know I'm going to have a bigger bill in May if I filed my taxes in April, and then I have to go, you know, and pay that. So it's really similar to kind of figuring out your personal budget, right? When your car insurance is due, if you pay it every 6 months, you know that's a bigger bill that is hitting, you know, during that particular month than other months. And it's the same thing with your business. All right. And other than that, Waldo, it looks to me like your spreadsheet is a hot item. And we've got a few people that would like you to email that cash flow spreadsheet to them directly. So I'll get you that list.
Okay. I would be happy to.
And I think that wraps it up.
All right. Well, I want to thank everyone for attending today. Thank you for your attention and your questions. Please remember to fill out the survey as you exit. And Christine, you've got information on our next webinar, which
yes, it's going to be 2 weeks from now.
Pardon?
It's 2 weeks from now on Thursday, and Debbie is presenting.
Yes. The topic will be credit card smarts. So she will be visiting about smart ways and not so smart ways to handle credit card debt and what to look out for. So again, this presentation has been recorded. It will be uploaded to our YouTube channel tomorrow. If you want to go back and review it again, I apologize for the technical issue we had in the middle, but thank you for your patience through that. And I want to wish you all a good evening. Thanks for joining us, and we'll see you next time.